You guys like deep research and analysis. Well, today I got 4 stocks that I have done a lot of deep research into that I want to share with you. Let's not waste any time. I respect your time. So let's just jump right into the first stock, which is going to be Google. So let me pull up Google right now. I want to go over the market cap, some of the technical analysis, and why this stock, I believe, is not just a good buy today, but it's going to perform very well over the medium to long term. Medium term could be like 1 year, and then long term is like 3 to 5 years. Currently, the stock is trading for $254 per share. It has a $3 trillion market cap, and this company, I think, can be a $4 trillion market cap as long as they basically continue doing what they're doing. Right now, the valuation is really good at 27. And for me, the reason why I still like Google or Alphabet is because of the search advantage, which is still intact within the business. For more than a year, Alphabet has faced the looming threat of Department of Justice antitrust case. The worst case scenario was pretty devastating, to be honest. They would be forced to have divestitures of Android or Chrome, and that would basically help out Apple, and basically that would end the relationship that they have with Apple, which is an extremely lucrative relationship. So I was kind of like on the border of on this stock for a long time, but now I really see that they have a strong competitive advantage. Their search is amazing, and it's really unmatched distribution. So that distribution through Chrome, which captures nearly 70% of the global browser market, and Android, which runs on roughly 3/4 of the world's smartphones. So on top of that, Google Search is still default option on Safari, thanks to the revenue sharing deal with Apple, giving it reach across most of the remaining users. So this is a stock that I really want to go into the technicals on, that I would recommend just owning really right now. A lot of people have talked about AI bubbles and how certain stocks are very overpriced. It's hard to say that. I can't really predict that. I've given you guys some warnings and some concerns that I've had using some facts and data. When it comes to Google, I think this is one of the safest companies in the market. Even though it's at the top of the Bollinger Band, over the long term, this company just has great performance. Like over the 1 year, the company is up from like 163 to 252. So if the trajectory just continues, it's like a straight line. You can kind of see like from here to here, it's like a straight line. And this was a really good buying opportunity, but now I still think it's a really good buying opportunity. It's far from being disrupted by any AI. Because they are involved in AI as well. Search is actually enhanced by AI now. Like basically, if you go to Google and you type something in, it's going to have AI search, and that is very helpful. Over 2 billion people now use AI overviews each and every single month, and Alphabet recently launched a global rollout of AI mode, which lets users seamlessly toggle between classic search results and controversial chatbot styles. I've actually been using the AI search myself. From time to time, it really simplifies things. Like for me, if I write like how many grams of protein and like 100 grams of like chicken breast or something, it'll tell you like how many grams of protein, etc. Right? So they have a distribution moat. Chrome and Android dominance, really, really good. They still have the Apple deal, which is good. They obviously have behavioral lock-in, so most people don't change default browsers, so billions will continue to Google it by habit. Like people say Google it all the time, right? So that's why like this is the safer stock that I have on my list. And yeah, to wrap up before we get into the second stock, AI integration into search, strong ecosystem, and cross-selling. Actually, cross-selling is pretty strong. They have YouTube, they have cloud, which is growing really fast, critical in the AI data infrastructure boom. That's amazing. Ads, obviously, ads kind of like run the world, right? So like ads are like, man, one of the stocks I have on my list is Meta, and like ads essentially, yeah, it's just super powerful. Data advantage, Google has billions of daily queries, giving it unmatched training data for AI. The more data it gets, the better it is. They reported $96.4 billion worth of revenue in Q2 2025, with really strong net profit margins, 31%, and trailing PE at just 25. So if you look at the valuation versus the peers, I mean, Apple and Microsoft, Google is trading at lower PE ratio. So I think that is something very notable, because if you're looking for one of the Mag 7 stocks to participate in AI, scalable growth, that's Google, high profitability, valuation opportunity right now. PE ratio is very, very reasonable. If I go to the statistics tab, I want to show you kind of where the PE ratio is. It's at 26 now, pretty much in line with history. But this is really cheap. Once we look at some of the other, when we look at Meta, this is going to be a very, very low number. And most investors think that Google is a safe bet, and that's because it is. It's gone, basically, it has a search monopoly. It has YouTube, It has cloud business, which is super strong. It actually has self-driving cars. And the biggest thing is it got cash. It got all sorts and all kinds of cash and all kinds of currencies. They got dollars. They got everything. They got reserve of so much cash that they're getting from markets. But here's the thing, the market already knows that. So every analyst and every hedge fund, every pension fund on Wall Street basically knows that Apple is a safe bet. And that's why it's likely just to continue to have good results. And the real question is, this is kind of deep, but you guys are trying to like kill it in the market and just get like rich like overnight. It's not going to really happen, right? And over the long term, you're still going to average out to whatever the market returns are. Like that's just how it is. I'm telling you from experience that it is difficult to beat the market over a long period of time. It's been very hard. I've done lots of research, but also the fact is that most hedge fund managers can't even beat the market. So you have to understand for yourself that safe investing, long-term investing is the way. And your real goal, okay, I'm going to tell you right now, if you're a beginner, your head's going to blow up. You're going to say, oh, this is BS. I want to, do this overnight. Long-term, you just want to beat the S&P 500. That's your goal. Okay, your goal isn't to like triple an account in 3 months, because it's possible with options, but it's not really likely, right? It's not likely. So your actual long-term goal should be how to build wealth over a long period of time and beat the S&P 500 and do better than other people, because it's a relative game. And you're going to do pretty much more or less similar to the market. Like it's very rare that the market goes down and then you're up a whole lot of money. So the way investing works is you have a benchmark and you want to beat that benchmark. And I think Google is going to help in beating that benchmark. Okay, so next stock is going to be Meta. So let's go to Meta right now. And guys, as you know, I'm not a financial advisor or anything. You can have your own goals. I'm not giving you advice or anything like that. I'm just trying to tell you my opinion, my mindset, my education, and my opinions. All right, so important to keep that in mind. All right, so Meta is currently at $716 per share. The P ratio is actually pretty decent, but let's go to the statistics. I just want to compare Meta real quick to Google as we're looking at. Meta actually has been pretty stable. Actually has been really stable. For some reason, I thought that they were over 30 PE. So actually, yeah, well, no wonder it's on my list today, huh? No wonder I did all this research. So Meta is not really the same company that was in 2021 when everyone was like laughing at it for investing in the metaverse, which was pretty crazy to be honest. But Mark Zuckerberg, he just pulled off one of the greatest turnarounds in corporate history, and hardly anyone's even giving him credit for it. But Meta actually did the craziest thing. And what Meta did was absolutely wild. And they did the craziest thing, which is Mark stated that Meta is willing to risk misspending a couple of hundred of billions of dollars in order not to fall behind the AI arms race. So he ended up buying a lot of chips. And this is all because he wants to be part of the AI race, and he's saying that the risk is higher on the other side of not investing aggressively. So he spent hundreds of billions of dollars on AI chips, right? And he wants to have the infrastructure to actually support the future, because it makes a really big difference if you can achieve some great phenomena in AI advancement within, let's say, 15 months versus 20 months. That 5-month period can be the difference between hundreds of billions of dollars of market cap, or even more than that, right? So it can really cement the future for Meta. And that's why Mark said that I'm willing to invest money even if I'm misspending it. And I think that means, and I'm going to talk about this pretty soon, that this is pretty much like a leap call option bet that Meta can skyrocket, or it cannot work out. But I think the chances are that he's making a really smart investment. So regarding chip infrastructure demand, he remarked that even if training workload requirements change, it doesn't mean companies will need fewer chips. They may instead shift towards more inference compute and maintain high demand for data center infrastructure. So he basically confirmed that Meta will invest hundreds of billions of dollars in building massive AI data centers as part of its chip infrastructure strategy. So the massive conviction from Mr. Zuckerberg is really big thinking. He's not thinking small here. He is a big tech CEO, so he's thinking about the future. And if you are an investor, the whole point of being an investor is you want to invest in the future. So if you're trying to invest in the future, Meta is a pretty good bet right now. Like, Meta is a good bet right now, in my opinion. Let's look at the chart, because this stock, it can be a $1,000 stock. Like, it can absolutely get there because advertising demand is massive. There is AI investment. This is already a big Mag 7 stock, so I'm not like telling you this little secret of like some small stock, right? I'm just telling you pretty much what you should already know. But it's important to do the basics. Most people, they get lost in the fancy and the hype and the shiny object syndrome. Instead, I want you to understand that big tech CEO like Mr. Zuckerberg, who has a big mission, big dreams of making even more billions of dollars for himself, will make you some money along the way, right? So yeah, and look, the perpetual chip demand is really interesting, because even if AI training slows, Meta's shift towards inference compute means chip and infrastructure demand will stay strong. It's not really short-term hype; it's long-term ecosystem dominance. I'm telling you right now, the guy is not dumb. He obviously built one of the best companies in all of history. So infrastructure for the future is really strong here, and I would say that, yeah, Meta, great company to be invested in right now. All right, let's talk about AMD, the OpenAI partnership that changed absolutely everything. AMD has been an absolute runner. I've been talking about the stock because it's cheaper than NVIDIA on a valuation basis. It's just going for cheaper, and it's still getting a piece of the pie, right? So it has a much smaller market cap than NVIDIA has. Some of the key facts about this OpenAI partnership, they basically just announced this on October 6th, which is like 2 weeks ago. They announced a multi-generation strategic agreement unlike anything before. Like, I'm pretty excited. I might not seem excited because it's the morning for me. Man, I'm excited. There's a lot of money to be made. Like, hand over fist, guys. Hand over fist, bicep over tricep money to be made. Key fact is OpenAI will deploy 6 gigawatts of AMD GPUs, starting with the Instinct MI450 series. The first 1 gigawatt deployment begins in the second half of 2026. So there's some time here, but that's good. It's good to kind of get in before all of the fruition of all the results happen. AMD issued warrants for 160 million shares to OpenAI, and this is going to happen in vesting stages based on performance and deployment, which is pretty normal, right? You give stock, and based on results, you get that stock, right? So the partnership is described as core strategic compute partnership. It's not just a supplier deal. This makes me think that it's a really good relationship that could end up making AMD just a whole lot of money, really. It is non-exclusive, so I did the research on that, and I tried to understand. And basically what that means is OpenAI still uses NVIDIA. They're not really going anywhere, but AMD is now firmly inside of the AI ecosystem. So it's like, we're still going to be using NVIDIA, but come in here, buddy. I'm a pat you on the back. We're gonna do some business too. And to what extent, we gotta see. We gotta see how that is gonna play out. But again, I like to make bets where something can happen, where you can make a lot of money, right? So AMD is that something, right? Something big is already kind of in place. To what extent, I don't know. But I'm pretty bullish that it's gonna do pretty well, right? It looks like a very positive sign. So AI chip expansion and market position. The MI300X GPUs are already being used by Microsoft, Meta, Oracle, and that's a good thing because they're taking a piece of the pie. The pie is still growing because it's a massive pie. So AI GPU demand is sold out through 2025. So in 2026, I hope to see just a whole lot more revenue. I hope that they have a whole wheelbarrow full of tons of money, and that is likely to happen. The projected AI GPU revenue is between $12 to $14 billion next year. That is a whole lot of money. That's a whole lot. So AMD is a firm stock that I am bullish on, and it's one of the 4 stocks that I think is a very strong buy right now for continued momentum. PE ratio is very high. It doesn't really matter because of how much money they're about to make. On the 1 month performance, it's up 46%. So, I mean, you tell me, are you willing to wait? Let's say it's 2 years to make another 46%. I mean, that's a good return. That's going to beat the S&P 500, most likely. The S&P 500 has done very well multiple years in a row, but still, 46% in 2 years. I'm just throwing out a ballpark number, by the way. I would say that's amazing, right? Can it do that again? In 2 years? Well, it just did it in 1 month. So, of course, it's possible. Data center dominance, EPYC server CPUs now hold 32% of the market. The Turin chip integrated seamlessly with Instinct GPUs, allowing full-stack AI compute systems. Data centers revenue, by the way, is now about 40%. And it accounts for 60+% of gross margins. So a lot of money, and a lot of that money is very profitable, very high gross margins. And to wrap up AMD before I get into the next stock, which is going to be Chipotle, is that AMD has a about 27 times PE ratio on a forward basis, where NVIDIA is a good amount more. It's over 40. So I would say it's a sweet spot for AMD that it's a lot cheaper. Okay, let's talk about the fourth stock, which is going to be Chipotle. I have Chipotle shares myself. Chipotle is a stock that has not had the best performance. Down a little bit on the stock. I have an average cost of $45.88. And this company is basically down more than 35% for the past 52 weeks. I caught it, but I caught a little bit of a falling knife. And obviously, that falling knife has gone down 8% more. But overall, I'm holding Chipotle. And when I look at the restaurant space as a whole, it's not the easiest space to be currently invested in. I said 3% of your money should be in the fast casual space, right? That's Chipotle, that's Kava, that's Sweetgreens, right? So I have a very small amount of my money, but I'm invested in this space. And it hasn't been really easy, and I admit this because I'm actively researching these companies and I'm asking myself, should I hold this category? And the answer is yes. Like, all of these companies are still going to do pretty well, I think, but right now it's been tough. Same store sales is a really important metric that has not been going so well. And for Chipotle specifically, revenue growth remains positive only thanks to aggressive expansion. Same store sales have not been growing, so that's kind of like a troubling sign, but its PE ratio has fallen to the lowest point in years. So it's kind of that interesting play where I'm looking at an opportunity. So since Chief Operating Officer Scott Boatwright has taken over as CEO, Chipotle's struggles have become more apparent. The economy remains uncertain. The fast casual restaurant space, like Kava, like Sweetgreens, some other stocks I've been talking about, they are under some pressure. People in America, the economy isn't the best. People do want to save money, and they aren't spending as much money right now on the fast casual space. So although it seems like restaurant stocks are in a slow period, that's temporary. There's still going to be high demand for eating out, and since these companies have strong brands, Chipotle specifically, it's probably going to do very well over the long term. And if you actually ask me, I remember when Chipotle had an E. coli outbreak. I was still back in college, and this was many years ago. They had that first E. coli outbreak, and the stock just went crashing down. I remember I bought it for like low $300 per share. And that was before the stock split. I think, I forget, I don't know how much they split for. It's been so many years, but you can check it up. But I bought it at low 300s, and it was a really good investment. I didn't hold it because I was so young at the time. It was more in the beginning stages of my investing journey that I saw some money, and I'm like, oh, let me take this money, because every penny mattered to me back then. Chipotle for me was a luxury. Eating out at Chipotle and spending $8, it was $8 at the time, or $7.90. I think it was $7.95. It was a luxury to me because I was broke. I was broke in college and I was investing, but every penny mattered because I had to pay rent. Yeah, it was just, money was very, very tight for me. So yeah, Chipotle, when the E. coli outbreak happened, I was like, well, I eat at Chipotle, and this E. coli outbreak was one of the best buying opportunities. And that's kind of what I think we're at right now. We're at kind of very low levels on a 52-week basis. PE ratio has gone down significantly. Let me show you kind of what the PE ratio is, because Chipotle at one point not that long ago was at a 75 PE ratio. Now it's cut in half. So I'm telling you, like, that is a very good opportunity to buy a stock when the PE ratio goes down that much. Like, it was in the high 60s before. It was like 75 at its peak or so, but now it's at 35. So it's half. It's literally half of like where it's been, and that number has gone down significantly. On a forward ratio, it's 28. So I think Chipotle will grow into just a cheap valuation within 1 to 2 years, as long as they keep expanding, which they are. They're going from 3,800 stores now to their goal is 7,000, which I think is a lot. That's a lot of expansion. And with that, the future growth of Chipotle stock will likely depend on how many stores they can get to. Can they keep the same store sales not falling too much? They don't want to cannibalize. They don't want to open up stores that are like too close to each other, of course. And a lot of it will also depend on their international success. So like, they opened a small number of locations in Canada, okay? They opened some up in Western Europe. I was in France 3 years ago, or 3.5 or 4 years ago, and I went to Chipotle. I was so excited because I live mainly in Eastern Europe, like Dubai, like Cyprus. Like, I try to just stay in this time zone. I like the culture of Eastern Europe a lot, and that's kind of where I prefer to spend a lot of the time, but it gets really cold. So anyways, I took a trip to France, and yeah, I was so excited to go to Chipotle. I was like, oh man, because I know the brand. I'm like, oh, I want to go. I want to eat this. So yeah, that's good that they're in Western Europe. They also opened the location in Kuwait. So under Boatwright's leadership, they plan to expand into South Korea, Singapore, and Mexico. I think Mexico is going to be freaking crazy. Like Mexico is either going to be a very bad decision or a very good decision. I'm very curious myself. And basically, to wrap up this fourth stock, I think that the stock can continue to bounce. It had a really strong bounce from like $38 per share to essentially like right now it's like pushing 42. It had a nice bounce from 38.70s or 38.50s, whatever, back to 42. So, you know, if we kind of bridge half of the gap here, it can be a $50 stock, which is not like tons and tons of money, but it's good money. Man, it's like going from 42 to 50 would be a great return, even if it took heck a year. That's like around 20%. So I would be personally excited for that type of return, and I would just use covered calls. I'm just going to be using covered calls. Like my position right here, I don't have a covered call because in my Discord community, I've told the guys that I just want to hold this stock. It's a small position like this, Sweet Greens, Kava, all my recommendations here are under 3% of the portfolio. So I said that just hold it. Like we're going to wait for a recovery, because if you sell covered calls, they're good for income, but I think that restaurant stocks can do very well in the short term as well. So I don't have any current covered calls on the position. But if you want to generate income on it, just go for like a 40, 43 or 45 in that range covered call play for like 1 to 3 months. That's essentially what I do in my community every Monday and Wednesday. I just look for opportunities that I think are good on a risk to return basis. I'll explain like why I think it's a good investment. And then I'll do an option trade, like live on my call. And I'll say, hey, this is what I'm doing. And I'll post it in Discord. And people will just kind of copy or learn and just build up their skills in creating income and generating income with option trading, with investing. And that's basically what I do on my Monday and Wednesdays. So, yeah, if you're interested in that, you can, learn more about that, schedule a consultation. And, these are the 4 stocks that I'm buying right now. So hope that you have a peaceful, awesome day. Let's make some money this week, and I'll catch you in the next one.